तो हमारे साथ जिम रॉजर्स जुड़े हैं, जो कि चेयरमैन हैं रॉजर्स होल्डिंग्स के. जिम, हाय, मिहिर हियर. कैन यू हियर मी?
I hear you fine. Can you hear me?
Yeah, I can hear you very loud and clear. We had a chat yesterday only, but I didn't know that you will be so bang on that US markets will give away 5% of their gains in one day only. You mentioned 10% drop, 5% dropped yesterday itself.
Well, it's only because I learned everything from Zee Biz. You know that.
That's so nice of you. But I mean, see, we have on intraday basis also, if we see, we have seen a rebound in Dow futures. And before you joined us, what we were trying to figure out was that will this recovery get sold into? Because typically that happens, you know, in a heavy sell-off. Whenever market recovers, typically it gets sold into. What is your view?
Now, you know, I'm the world's worst market timer. I'm no good at short-term trading, but what I expect to happen is that the market will be weak throughout February, March, maybe into March. Once the Federal Reserve raises interest rates, the markets will start rallying, and then we have to decide what to do next. Part of the reason the markets are going down now is that, well, first they went up so much for so long with no correction. It's well overdue for a correction, as we discussed. Now we're going to have the correction until they raise interest rates. People will buy on the news, and then we'll have to figure out what to do next. Just watch Zee Biz. You don't need to talk to me.
That's true. Jim, also, you know, lately in last maybe one, and you have seen markets for many decades now, but in last 1 or 2 years, the typical tendency of all large markets globally, including India, US, Hong Kong, the typical tendency is that the corrections have been very sharp but very short-lived. You expect this trend to continue?
Well, it depends on how you consider short-lived and sharp. As I said, I expect the markets to be weak in February into March until they raise interest rates, and then we'll start rallying again. But the next time we have a bear market, I want to remind you, it's going to be the worst in your lifetime. We haven't had a bear market since 2009. That's 9 years, which is very much longer than historically the way things work. And then 2008, we had a problem because of too much debt. Well, you know as well as I that the debt is much, much, much higher everywhere in the world now, even in China, which had virtually no debt last time. So the next time we have a problem, it's going to be terrible. You better watch Zee Biz to survive.
That's, again, I would like to thank you for that. That's so nice of you. What is the probability of a next serious global slowdown or a meltdown originating from China? Because there have been concerns in China about the kind of credit rating that they are managing, about the kind of debt they are running, about the so-called management of the books which is happening in Chinese banks.
China had no debt for many decades. I mean, nobody would lend money to Mao Zedong, so they didn't have any debt for a long time. Now they do. And you're going to see some bankruptcies coming out of China, which is going to surprise a lot of people, including me, and I know it's coming. Yes, the Chinese have built up a lot of debt fast. They don't know how to handle debt. They don't have experience in debt. So yeah, but whether it starts in China, I don't know. It usually starts in some place where people are not looking. You know, you remember before, it started in Iceland. People said, what? We didn't know Iceland could go broke. And then Ireland went broke, and then Bear Stearns went broke, and then Lehman Brothers went broke, and everybody said, oh, there's a problem. So it usually starts someplace we're not watching and snowballs.
That's true. But Jim, can we safely say that for the time being, you know, for next maybe couple of years, the best performance of the US and, I mean, obviously the global markets is behind us? Can we safely assume that we have seen the best of the bull run now and it's behind us?
Well, the market has been up for 9 years. So, yeah, the best is behind us. That does not mean there cannot be a very nice leg up here at the end. You remember 1999, I don't know if you remember, but in 1999, you know, the NASDAQ tripled in like something like 8 months, 9 months at the very end.
Yeah.
The market been going up since 1982, been up for 17 years, a few corrections along the way. But then in 1999, it had this wild explosion, and that was the end. So it might happen again. I don't know. I'm not smart enough to know.
But would you want to maybe park some of your money in a safe haven, let's say a gold or something of that sort?
I'm not buying gold. I own gold and have for a long time. Haven't bought any serious gold in 8 years. But if and when gold goes down a lot, my plan is to buy a lot of gold, because before this is over, gold is going to turn into a bubble itself. It's going to get very overvalued. When turmoil comes, people are going to be desperate for some place. Gold will turn into a bubble, a very overpriced asset at that time. So I plan to buy a lot more, but not for a while.
One last question, Jim, and I asked you this yesterday as well, but I didn't know that overnight Bitcoin will crash the way it did. And I think it's going to crash more. Is that correct?
Well, my answer is today is the same as yesterday. I don't own any Bitcoin. I'm not going to buy any Bitcoin. A lot of those things are going to disappear, just like has happened in every other new asset and every other bubble. I don't know I do know that money is going to be on the computer in the future and on the internet in the future. I suspect it will not be Bitcoin or any of the others. I'm not buying them.
Absolutely. All right, Jim. Thank you so much for joining us. Pleasure having you on the show as always. And thanks for appreciating